Good day, guys. Welcome back to this new video. It is your boy once again, Paul Hilaju. So guys, as you saw the title, this will be actually me combining everything that I use in my ideology. So basically I'll be showing you how I use my smart mind concept and actually how I analyze the market in full, because this past weeks you've been seeing me analyzing, like using certain tools, using only order blocks, liquidity, and all the other stuff, guys, imbalances, inefficiencies, and all. So I just want to also like show you how also I use Whyckoff, how I also use Whyckoff, because with my ideology, Whyckoff is just a bit of a 20% of what I trade. So meaning that I can also trade without using Whyckoff. But I just want to show you how I actually trade. So guys, and also it will be a market breakdown. So guys, as you can see, we're looking at Euro USD on the weekly time frame. So we can see a very bearish momentum, and by that we can see that we have some lower high, lower lows, lower high, lower low, guys. So as you can see, we have some lower highs, lower low, lower high, and lower low as we broke this structure. Then we have some lower highs, and this one actually failed to break here, but it was actually a bit of it was actually a correction. This is part of a correction, but we have what, our new lower low, then lower high. Then right here we can see, yes, this is our new lower low as it broke this structure. Then we can see a lower high, and we can see this part, it haven't broken this structure, but yet we can see that what is actually happening on this part, it's what actually happened on this part. I'm not sure if you can see very well, but actually what is happening on this one is actually what is happening over this one. Because as you can see, for us to say that this is in a bullish momentum, this is the buyers are taking control. We have to see by at least the structure first breaking this one to the upside, then also coming down to actually mitigate the point of interest that it has left, then shooting up and breaking another structure. So by seeing this part, guys, now by seeing this part now, you can see that the market hasn't been broken. You get me? The market hasn't been broken onto this level. So meaning we are still on the sellers still have control. The sellers still have control. So we'll just do a breakdown now. But I wanted to just show you the structure of the market, that we are in a bearish momentum. It's quite cold outside, guys. It's quite cold, it's raining where I am now. Raining, but it's always good to work when it's raining. I love working when it's raining. So guys, now we're going to spot our weekly highs and weekly lows. So we can see over here that we have what, our weekly high. This is our weekly high, guys. Then we have our weekly low. Sorry about that. Then we'll just go to our day one time frame. Okay, guys, you are on our daily time frame now. And now on our daily time frame, we're just going to spot our daily highs and daily lows. Okay, that is our daily high. And over here we have our daily low. Okay, so this is our daily high, and this is our daily and our new daily low. I hope you can see everything very well, guys. So let's just zoom in a bit. So guys, as you zoom in now, we can see something very beautiful. As I zoom in right now, guys, I can see that the market has been a bit of a bullish market. So you can see that the market was creating a bit of a higher highs, higher lows, higher high. But here I can see something like this. Where's my okay? I can see 1, 2, 3. Okay. As you can see, we have 1, 2, 3. So I know that you're asking yourself, what is that? You know, you're asking yourself, what is that 1, 2, 3? So I just want to show you something, guys. So by us seeing that, guys, okay, guys. So by us seeing that, we can see that the market is a bit trying to make a distribution. The market is making a distribution. So I can say the distribution started over here. Okay, so we can say from this point right up to this one, I can see. Wait a minute, before we can continue, don't forget to hit that subscribe button and give this video a thumbs up. By the way, do you remember this chart from the economics class? Yes, the accumulation, distribution, accumulation and redistribution. So this is what I'm about to teach you about in the real markets. Stay tuned. I can say this can be a distribution, but let's just go to the smaller time frames and have a clearer vision of actually what I'm seeing right here. So but with my knowledge and with my experience, we can see that this is a distribution, guys. This is a distribution because we have this 1, 2, 3, and it can give it, and distributions mostly it's where we actually take our sell trades from. Okay, so this is where we take our sell trades from, and I can also have a bit of a confirmation right here. Don't forget, guys, we're on our daily time frame, and I also have a bit of a confirmation over here. Okay, let's do this. Okay, we can see over here that we have our SC, guys. We have our SC. So let me see if I've saved it very well. Okay, we'll just see. Okay, let me do this. Blue, and we'll just take it like this. Okay, so guys, wow, this is beautiful, guys. What I'm seeing right here is beautiful on day 1 time frame Euro USD. We can clearly see also that, guys, you have what? An SC. We have an SC. So an SC is sponsored candles. It's called sponsored candles. I know it's the first time you hear this term, but it's just the same as an OB and other block. It's just that in smart money concepts, we use different kind of terms, but you find that the thing we're speaking of is just the same thing. It's a matter of different terms. So we have an SC over right on this point, and we can see that this SC, it went down and the market mitigated the SC. Guess where? On a daily time frame. And as we can clearly see that the market is still going again to the SC point. So we'll just have to see what's going on onto this point. But let's just take ourselves back to our other time frames, to smaller time frames, guys. Okay, wow, this is a distribution, guys. This is a distribution, guys. So this is actually Whyckoff. Whyckoff schematic. Whyckoff schematic distribution. So as you can see, this thing, guys, it means actually a change of direction. It's what happens before a change of direction, basically. So this is Whyckoff. It takes about 20% in our ideology. It only have 20% in our ideology, and it works very well, guys. It works very, very well. We do not depend on Whyckoff, but yet we use Whyckoff to see what also the change of the direction. So we can see that we have that 1, 2, 3, and we have the market coming down, you know, some equal lows over there. And as you can see, the market did what? The market broke the range, and it goes again to where to mitigate that day one SC candle. And we can see that the market is also coming back to this point and going back to that point again. So we'll wanna see what's actually going on onto that point. But for now, let's just put our H4 highs and H4 lows. So I can clearly see over here that we have some H4 high, and over here we have some H4 low. Okay, guys, so we have some H4 highs and H4 lows. Okay, so we'll just go to what, and if I saw this mitigation, guys, if I saw this mitigation, I would have entered my trade, guys. I would have entered my trade from here, from just here over here. Now let's do this. My stop loss would be right over here. It's quite a big stop loss because it's a daily SC, guys. It's a daily SC. But if I was a retail trader, it would even be bigger. If like my ideology was like a retail one, it was a retail methodology, it will be a bit bigger. But now as it's institutional, you can see it's 46 pips. Then if I would have taken my stop loss from here, it will be 1:2. It's a bit small, but at least take profit. First take profit, it will be on my daily time frame. 1:4, guys. 1:4 with a 196 pips. Okay, so let's just go to other time frames because we want to actually catch what we want to catch, a smaller risk reward trade. So we'll just go to a smaller time frame. Okay, so now I want to introduce something new, guys. I want to introduce something new to you guys. The equilibrium. I mean the Fibonacci. I want to introduce the Fibonacci that I use. So we can see from here, guys. Okay, no. Okay, so this Fibonacci, basically, guys, onto this part it's my discount area, and onto this part, okay, onto this part it's my premium, and in the middle we have an equilibrium. Okay, guys, in the middle we have an equilibrium. So we can basically see that over here the market, we place it on the highs and the lows. So we can see that the market, this was the high of it and this was the low, and the market gets to the discount area, and onto this discount area the market does what? The market rejects onto it. So it means that it's a confirmation. This is not a sort of a holy grail or anything that I can say we can depend on. It's just sort of what? A confirmation. So this is a sort of a confirmation that the market can be now be ready to take the bearish move. So but we can see that the market also came back to retest what? To retest the equilibrium. But yet maybe we can have something inside over here. So let's just zoom in. to see a bit of new entries or something. But over here I can see something, guys. This can be the turning point of it. Now onto this place, we can see that the market can be turning. The market can be turning on this point. By the way, guys, we also, in situations like this, I want to show you something. In situations like this, whereas this bigger candle can take about 2-3 candles, you can see after here we have 2-3 candles. We take it also as what? We take it also as an SC, but on this SC we use this method of the 50% level. Whereas we place it, let me delete it and start it again. Whereas what we do is we place this the fibs over here, and we take about 50% or even the 100% of it, but it just shows us where the market is standing. As you can see from there, what the market did, the market came down and went again to this point, to the 50% level. And what did it do? It retested the 50% level, and what it do, it broke structure. So over here we can clearly see that we have a break of structure, guys. This is a good sell trade that we can all take. And don't forget, guys, I'm not a financial advisor, so I will not be responsible for any losses that you can do onto the forex market. As you must understand that the forex market is a risky, it's a very volatile market, so you can actually lose all your capital. You can actually lose all your capital. So I'm not a financial advisor. I'm just giving my thoughts. I'm just giving my thoughts to you guys. So we have a break of structure over here, which can confirm to us that the market wants to go up to what, to mitigate our point of interest. Then it will go down. So we can see that the market came to this level, which is the last level of it. Then this bearish candle, it's now starting. So, but we're not sure of everything, you know, we're not sure of everything. I just want to make a bit of a confirmation with everything here. As you can see, that was the mitigation. So I want to see something right on this side, because you have to also look on the side of what happened basically for the market to turn onto this place. So let's just have a look, because over here I can see inefficiency. I can see inefficiency over here, guys. Okay, I can see inefficiency. Perfect. So so guys, over here we have inefficiency, and I can see that the market has already filled it, unless if this one wants to come to this point, then go down. But we can see the reason why the market is turned over this point, and also it came back to this point to what, to mitigate just this area. So that is actually the reason of the market coming to that place. That is the reason of the market coming to that place. And we can see with the confirmation, let's just confirm with my momentum, because I also use this tool, which is to check my momentum, how long the market took to go up, and to see if it's a valid one. So okay, let me do it. So for the market, from, actually no, it's supposed to start from here. Yeah, it's correct. So from this inefficiency to where the market is turned to go up, it took only 27 bars and 1 day and 3 hours. So let's see how long it took the market to actually get to mitigate that inefficiency. This is also, guys, sort of a confirmation. It serves as a confirmation to me. It's not a holy grail. It's just a confirmation to me to see if this is a correct mitigation. Perfect. So guys, we can clearly see that this is a clear we can see that the market here is a clear mitigation, because over here for the market to get down to this point, it only took how much? It only took 27 bars. But for the market to mitigate this inefficiency, it took 45 bars, which tells us that this is just a correction. The market is what? The market is going down. So it's just a confirmation, guys, that the market, we are looking at a sell trade. And over here, guys, you can clearly see that we have a break. We had a break of structure onto this point. Let me do this. Perfect. So we can see also, guys, that we had what? We had a break of structure on this area, which is a big break of structure. Then the market has to go up and mitigate a point of interest. And the point of interest that we have onto this part is what? Is our inefficiency. Is our inefficiency, which is the point of interest that we have right now. So we can clearly see, guys, this is a clear confirmation that the market is really going up. I don't want to add volumes on this chart. I think with this we have a better confirmation. So let's just go to a bit of a smaller time frame and just have a more clear view. Maybe we want to catch maybe we want to catch a bit of a good risk ratio trade. H1 might be big for some of y'all. So but if you were to take a trade, you can take it, like, guys, you can take it from over here. Then your stop loss being just around over here. 17 pips is not bad. Then your take profit being over the daily temp, which is, this is a first actually your first target. Your first target must be on the daily low, which is going to be 1:10 risk ratio. It's a very good trade, guys. Very, very good trade. Let's just go to our M15 time frame and zoom in onto this area. So guys, we can clearly see after this break of structure and over this point that the market was actually retesting this area. The market retested that area so much. You can see the week trade over here. We have so many weeks over this point retesting it. And I can say this is a good sell trade to take now. This is a very good trade, sell trade to take right now, guys. It's a very sell trade we can take. And okay, let me do this. As you can see, it hasn't. I want to show you something, guys. I want to show you something right here, right here. Let me do this. Okay. So guys, as you can see, maybe many of you can say that this can be maybe a break of structure, but as you can see, the week for the previous high, it hasn't been broken, guys. It hasn't been broken. This is our H1 high. This is our H1 high. It hasn't been broken by this structure. Then our H1 low would be right here. Okay. It will be on this part. This will be our H1 low. Okay, perfect. So we haven't broken structure over there, and it can tell me that this is a clear sell position that you can go for, guys. It's a clear sell position we can actually take. Clear trade. Then saying that we want to actually place our, let's just see if we want to place our sell trade over to to that point. We can see that this one has broken this one, so we can do something like this. Yeah, saying if the market can come back to this point, we can take our trade to this from this point. Okay, let me do this. The market can come and mitigate this small weak trick, and we can place our stop losses just around here. Yes, 5,5. Then take our trade from there to our daily low. Take 1:34 risk ratio. So this one, when you go to smaller time frames, you can see very clearly, guys, and we can actually have a better risk ratio. We can actually have a better risk ratio. Guys, I want to explain the weak trick. Let's remove this for now. I want to explain the weak trick. So this is the weak trick, guys. This is the weak trick. We can see that the market, let's remove this. We can see that this candle actually surpasses this candle. So right here we know that inside there is an OB lying over there. There's actually an order block lying over there. So what we do is we place our level over here on the base of the candles. Then we place our 2 over here. Then we know that the market will at least come to the 50% level, or will actually hit this level. But for safety issues, and like for us taking a bit of a risk, a reduced risk entry, we can place it right over here. Then our stop losses, I would like to make it about 5 pips at least. 5 pips stop loss. 5 pips stop loss. 1:38. 1:38 risk ratio to where? To our take profit, which is our daily low, which will be our first take profit. Then let's just go to our M5 time frame. So on our M5 time frame, what I've said, it's actually what is happening right now. That inside of this, guys, maybe you thinking that I've seen all these. This is what we call a weak trick, guys. Just look at this weak trick. We can see that over here there's only weeks, but you'll see when we go to the smaller time frame that there's actually an order block line. See, we have an order block lying over there, and see this part has mitigated this order block, and this one is just going again to this point to mitigate it again. Let's just go to our M1 time frame. Look at what is happening inside. There's a lot of candles inside of this part. So yes, guys, this is it, guys. This is it. This is the trade we're about to take, guys. This is the trade we're about to take on Euro USD. A very beautiful sell trade we're about to take on Euro USD. And as you were speaking about this, guys, you can, let me do this. So inside of here we have what? We have a weak trick inside of this big one. So guys, this is a confirmation. I've shown you many confirmations on this Euro USD, and I've shown you a lot of things, and I've shown you how I actually analyze the market. And it's a confirmed sell trade because you have what? We have a break of structure. So actually what we're waiting for is a reversal. We're waiting for a reversal so that we may take our trade, and which is this part where we are going to actually take our sell trade. Then let's see where we can place our second stop loss. I can see something over here that already happened. Okay, I see something right here, guys, which has already happened. So my second take profit will be right on this point. Let's just do this. So my second take profit will be on this point, guys. Will be on this point. I have reasons why it's going to be on that point mark, but my first take profit will be on daily on my daily low. But for those ones who have a small account, please put your stop loss on daily low, unless if you can manage your trades. Unless if you can manage your trades, but it's always good to take partials very quickly when you are on when you have a small account. So let's just go to a bit of GBP USD. I saw something that I want to explain very fast. This is called accumulation, guys. We speak about distribution. This is accumulation. So on this accumulation, we can see that on the weekly time frame, GBP USD has created a beautiful accumulation, which a weekly time frame, it's a very big time frame, guys, and it's a bit going to take a long time for GBP USD to play. But yet I can beautifully see that GBP USD is about to give us a very good buy momentum, a bullish momentum. So we can see that we have our SC, our AR, and our ST, which these are some titles for Whyckoff, but they are not important as long as you understand what this is and how it is created and the inner about it. We have some ST, then we have our spring and our test of the spring. We have some LPS, we have some break of structure, liquidity lying over here, and we have liquidity being freed over right onto this point. And let's just go to a bit of a smaller time frame, at least H4 time frame, we can, so that we may have a clearer view of at least buy trades that we can take, as the market is still, it's going up. The market is just going up. So we can see that we have some lower highs, we have some higher highs, higher lows, higher high. We can see this structure over here: higher lows, higher high, higher low, higher high. Over here we have higher lows, and we broke structure over this point. We have a break of structure on this point. Then I can at least wait for the market to come a bit down to mitigate what? To mitigate my SC, because you have a beautiful SC over here, and yet again we have what? We have inefficiency lying over this point. So this gives me more confidence that the market is just going to come and mitigate my SC, and again feel the inefficiency. Let's just go to our H1 time frame. Yet on our H1 time frame, we can see that the market is still going up. It's still going up. We can see that over here we had some equal highs, liquidity being freed over there. We can see that the market is just going up, guys. The market is just going up. Basically, on this trend like this, I don't normally take trades. I don't normally take trades, because if you can look onto the weekly time frame, on the weekly time frame, we saw that the market had a bit of a break of structure and liquidity being free. So the market can possibly come down. The market can possibly come down and just go up. But we clearly know that the structure of the market, the market is changing direction. As we can go, we can view the previous momentum. As we view the previous momentum, we can see that this was a bearish momentum, and we see that this is a range that has been created. And we don't normally actually take trades on a range. We don't normally take trades on a bit of a consolidation. because it's a bit riskier. And when you go to a lower time frame, you're obviously going to see a bit of an opportunities, but yet by you taking those opportunities can put you into a risk, and again you can also profit from them. So it's just safer. It's just safer for you to wait for the market. Just have patience, because you know, in the market, it's all in psychology, and it's all in your patience, and execution and technical analysis takes about 10%. You see, we have analyzed, but it takes patience. It takes patience. Now I have to wait for this setup to play very well, so that I may take a good perfect trade, and this trade I can profit a lot of money than me being able to like going onto day trading onto this trade. So I'll just wait for the market to play out, guys. I will just wait for the market to play, because it's still in a beautiful range. It's still in a range, waiting for at least the market to break up out of this accumulation, then at least mitigate, then we can now take our trades upwards, guys. So this is all from me, guys. This is all from me. I hope this video was educational and you've learned a lot from this video, guys. I hope you've learned a lot. And I was looking on NASDAQ again. Let's just go to a bit of H1 time frame. No. And I was looking at NASDAQ over here, guys. We had a bullish move. Then also we had a bit of a consolidation in here, creating a beautiful range. Then the market broke the consolidation, and it came back to at least come and a bit of mitigated. And over here we have some inefficiency, and the market has rejected and filled all the inefficiency. So taking our trade from here, it may be a good one. It may be a really good one. So we'll just see how everything plays out, guys. We'll just see how everything plays out. But I hope you enjoyed this video, and I hope it won't be that long as I expected. And thanks a lot, guys. Thanks a lot. Don't forget to hit the subscribe button if you haven't. And like, if you are new to this channel, just hit the subscribe button because there's more valuable content that are coming through. And also don't forget to give this video a thumbs up. Don't forget to comment down below and tell me what you think about this video, and give this video a dislike if you didn't like it, and tell me why you do not like it, and so that I may be able to improve where you want me to improve. By the way, guys, it is all from me, guys. It is just all from me, and I'm just signing out.